Well, let's be completely frank. It's very normal for Jensen Huang to go to Beijing. NVIDIA has a sizable footprint in terms of employees in that country. He visits them specifically more than once a year. He's not wearing his leather jacket, according to local media reports. He's in a suit, and the Chinese news agency is reporting that he met with the vice premier. So, it's hard to draw a sort of causal link between the news on the license requirement. And that's the basic thing that I want to clarify. The US government is not saying that H20, this chip that NVIDIA designed for the Chinese market, is illegal or that it does not conform to the parameters. What the US government said yesterday is that NVIDIA needs a license. And what we're inferring is that because they opted to do a $5.5 billion write-down on inventory of H20s, they have not yet applied for or are not going to apply for a license, hence why they had to address on paper the cost of the inventory. So what happens next, who knows? But the timing is timing, Danny.
Ed, can we just talk on air about something you and I were messaging about yesterday, which is that in my mind, it doesn't matter if the U.S. puts H20 export curbs on NVIDIA, because the Chinese Communist Party has already advised companies not to buy these chips. And maybe a little bit differently than how things work in the U.S., when the Chinese Communist Party advises you to do something, in China, you do it, or maybe you disappear.
Historically, yes. You're referring to the Chinese National Development and Reform Commission. And the edict or the advisory that they gave to their domestic technology buyers of NVIDIA's equipment was, we don't think this conforms to rules that largely stem from energy, raw materials, and supply chain composition requirements. But I think it is an advisory. What we know is that very large Chinese technology companies, Alibaba, Tencent, ByteDance, were the biggest buyers of H20. I think we also know that they had built up inventory of that technology and already had them. So, now the accessibility is not there. But I can't remember if we discussed this on the show yesterday. A side effect of this policy from the United States is if they can't use H20, what are the options for those Chinese tech names? Well, Huawei has a very similar AI accelerator. And so inadvertently, China now has this sort of opportunity to champion its domestic option, which those tech companies may well look at.
In a letter to Commerce Secretary Howard Lutnick on Wednesday, Republican Senators Roger Wicker, R. Miss, and Tommy Tuberville, R. Alla, urged him to revoke the AI dispersion order before it takes effect on May 15th because they believe it is excessively burdensome and could harm U.S. competitiveness. Because of its significant lead in the AI race and potent CUDA software, analysts remain optimistic about NVIDIA's long-term prospects despite the turbulence. Additionally, NVIDIA servers manufactured in Mexico are protected from extra tariffs under the United States-Mexico-Canada Agreement, USMCA, which should maintain profit margins on those goods. In an investor note, Stacy Rasgon of Bernstein stated, "We continue to believe that overall demand for AI from more mainstream customers remains strong, and it appears that AI infrastructure in general is more insulated from immediate tariff effects given Mexico-USMCA compliance of much of the hardware, as well as presumably the strategic nature of the industry, with substantial U.S. build-outs coming." Nevertheless, NVIDIA will remain a major player in the continuing trade conflict between the U.S. and China. Additionally, investors will be shaken by every new action. Because of export limitations and deteriorating revenue forecasts, Wall Street analysts are lowering their short-term projections for NVIDIA. This week, Wolfe Research reduced its price objective for NVIDIA from $180 to $150, while keeping its outperform rating. According to a recent client note, the company cited new U.S. licensing restrictions for AI chip exports to China, notably for NVIDIA's H20 models, which may have a $5.5 billion effect on quarterly earnings. Additionally, Morgan Stanley lowered its projections, cautioning that NVIDIA's data center revenue may drop by 8% to 9% during the upcoming quarters. Although the company maintained NVIDIA as a top choice, analysts recognized a more cautious approach than their earlier optimistic assessment. Not all sentiment has changed. NVIDIA is the key infrastructure play in AI, according to Bank of America, which reiterated its buy rating and $200 price target. Strong worldwide demand, a healthy chip backlog, and the company's software ecosystem were cited by the company as its main advantages. On Thursday, April 17th, one of the most prominent analyst calls was for NVIDIA Corporation. UBS lowered its price objective from $185 to $180 and reaffirmed its buy recommendation for the company. Following the company's warning regarding selling graphics processing unit chips to China, the price objective was revised. With F2026, C2025, Revs EPS now 223.5 before 86, and F2027, C2026, Revs EPS now 256.3 B602, we are revising both revenue and gross margin expectations lower. Due to the reduction in C2026 EPS, our PT drops from $185 to $180. Lately, NVIDIA has been among the most sought stocks. As a result, you might want to think about some of the major variables that might affect the stock's performance soon. Shares of this manufacturer of AI and gaming graphics chips have returned 14.4% over the last month, while the S&P 500 composite has changed by 6.9%. NVIDIA is part of the semiconductor general industry, which has lost 15.7% during this time. Now, the most important question is, where might the stock go in the future? The buy and hold choice is always influenced by a few key elements, even if media stories or speculations regarding a major shift in a company's business prospects typically cause its stock to trend and result in an abrupt price change. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Things have changed. There's a crisis in America, and Dan Ives has piped it down. There was a color scheme going on back when there was American exceptionalism. And for those of you today, in honor of Louis Vuitton, the challenges they had yesterday, he's going with the washed pink shade today.
Okay.
A la LVMH. Yep. So we have a more subdued Dan Ives with this. Dan, how have you survived the last 10 days? You've had to bring some price targets down. What has been the Ives methodology to reset?
A lot of coffee, a lot of calculators. And look, to me, it's talking to so many people throughout supply chain, customers, companies to understand basically scenarios. And that's how we viewed it. Like, what are number cuts going to look like? And then what does that mean for prices? And I think you're starting to now see the results of that, NVIDIA being the first one in terms of the real effect from this tariff war.
So, Dan, how do you think about, I guess, the underlying tech spend globally over the next 12 months? To what extent, if any, does that likely going to come down?
Yeah, so Paul, I view it as, let's say, 325 billion Mag 7 spending on CapEx for AI. That's assumed, let's call that 280, 290. In other words, like that's right now what I think is baked in. Like, you already are going to have probably 10% cuts, could be more. But I think most investors are going to basically, you're not going to have guidance. You're going to toss out June. You're going to toss out September quarter. You assume some negotiation gets the cooler heads. And I think right now, every investor I've talked to, you're looking at 26 numbers to understand what the normalized numbers look like with some sort of baseline tariff.
I mean, let's do NVIDIA quickly here. I want to get to Apple, which I think is the attention of our listeners and viewers. Were you surprised by the NVIDIA markdown overnight?
I mean, I think it's a knee-jerk reaction. Obviously, it's a headline and it's negative news. But I mean, to me, Tom, like I already assumed 10% cuts.
Right. Okay, let's start with Apple here. And you and I have gone back and forth in this over the years. And over the last 38 months, Dan Ives has looked like a genius on Apple until this crisis. Is there persistency of cash flow that is provided for share buyback and dividend growth? Is it still there?
It's that. I mean, look, even, when you scenario and sort of put pressure on the model and stress test it, cash flow comes down 5%, maybe 7%. The reality is that a lot of that on Apple, I think, starts to now get factored in. It comes down to with China numbers, unless these tariffs in their current state stick for 90 days and longer, then to me, Apple right here, I mean, is a name you own.
Does Tim Cook, Dan Ives, with all of your Pacific Rim work, Does he have a special relationship with Beijing?
Oh, I mean, look, Cook's 10% politician, 90% CEO. No one understands Beijing's supply chain better than Cook. The reality is, I mean, look, India gives some optionality where you could, call maybe 5, 10%, but they have no options outside Asia. I mean, and that's right now what they need to navigate and also make sure China, there's no retaliatory toward Apple, there's no retaliatory, we talk about toward Tesla. I think right now that's front and center what he needs to manage as well as within the White House to make sure these tariffs don't impact to the extent, look, you can't have $2,000 iPhones. That'd be 30% demand destruction.
NVIDIA has had a challenging 2025 thus far. The business, which had a huge 2024, is currently facing difficulties that have caused its stock price to fall. Its most recent setback occurred on Tuesday when it revealed that the Trump administration will essentially prohibit sales to China by requiring the business to get export licenses in order to sell its H20 chips to Chinese consumers. According to the report, NVIDIA would also record a $5.5 billion charge for H20 products and purchase obligations in the first quarter. The statement coincides with President Trump's anticipated imposition of taxes on foreign-sourced microchip imports. NVIDIA is undoubtedly facing significant challenges, especially in light of the impending AI diffusion export restrictions that will take effect in May and force specific nations to obtain special licenses in order to obtain access to a restricted quantity of AI chips. Additionally, its stock price reflects this. As of late Thursday, NVIDIA's stock was down more than 6% in the last 5 days alone and 24% for the year. However, there are some positive aspects of the business. As IT companies continue to build data centers to fuel their AI platforms, demand for its Blackwell chips will continue to be robust. However, that hasn't been sufficient to allay investors' worries. After DeepSeek disclosed that it used subpar NVIDIA chips to train its potent AI models, the Trump government imposed export restrictions on H20 chips to China. The information sparked concerns in Washington, which worries that China may utilize the technology to improve its military's performance relative to the United States and solidify its place in the global AI competition. NVIDIA will now have to pay for H20s that were originally going to China. That will have an impact on NVIDIA's earnings for both the first quarter and the entire year. In fiscal 2025, NVIDIA's fourth largest market, with $17.1 billion in revenue, was China. With $61.2 billion, the U.S. is its biggest market, followed by Singapore, $23.6 billion, and Taiwan, $20.5 billion. Notably, NVIDIA claims that 18% of its revenues come from Singapore because its goods are nearly always transported to other countries and customers use it to centralize billing. Only 2% of sales came from Singapore alone. Vivek Arya of BofA claims that the H20 limits may cause NVIDIA's fiscal 2026 sales to drop by 5% to 8%, and its earnings per share to drop by 6% to 10%. According to John Vin of KeyBank, H20 sales would bring in about $12 billion for NVIDIA through the third quarter of its fiscal year. Furthermore, he stated that although he thinks NVIDIA was able to ship a sizable quantity of H20s before the ban, the limitations will have a detrimental effect on the company's earnings. NVIDIA pledged earlier this week to invest $500 billion on AI infrastructure in the U.S. over the next 4 years, including plans to construct its Blackwell chips at TSMC's factories in Arizona. This is in spite of the prohibition on H20 chips. NVIDIA will eventually have to contend with the U.S.'s AI dissemination regulations in addition to the H20 limitations. The rules, which were implemented by the Biden administration shortly before he left office, establish a 3-tier system. Nations that can essentially obtain powerful AI chips without any restrictions, those that require licenses to obtain a restricted quantity of chips, and those that are completely prohibited from obtaining chips, including China. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
very simple way investors can trade on the whipsaw moves we've seen from the SIBO Volatility Index. That is the VIX, just over the past few weeks. I'm Jared Blickery, host of Stocks in Translation, and let me show you just a very simple trading system I concocted based on the VIX surges. So just to recap, when the VIX goes up, that usually means there's some pressure on equities, and so sometimes if it spikes really high very quickly, that can be an actual buying signal. Now the trade-off is sometimes you get a little bit early into the trade. So the rule I was looking at is when the VIX surges over 45, you wait until it then closes under 30, and then you go long the S&P 500. Now we've seen this happen 11 times going back to the very beginning of the VIX in 1990, and actually, we didn't have any signals until about 1997 because of the low volatility in the 90s. But here we see the results. 1 week out, we have median returns of negative 1.2%, with results only positive 45% of the time. So 1 week out, this is not a great strategy to be buying the S&P 500 off of these VIX spikes. But 1 month out, you get a median return of 1.6%, 73% positive. 1 quarter out, the returns improve, still keeping a 73% positive. That's 3 misses over the last 11 times. And then at 6 months, we get really nice returns, 13.6%, along with that same percent positive. Now, if you hold all the way out to 1 year, you get about 90% positive and returns approaching about 20%. And that just illustrates that it's better to be a buy and hold investor and kind of wait and maybe dip in the waters when we see some of these pullbacks, not expecting these moves to really generate any immediate profits. Now, B of A just released a similar analysis where they looked at the same data set going back, and they found the same 11 instances when the VIX spiked above 45, but they bought on that. They didn't wait for it to close under 30, and the near-term results weren't that great. But if you go out 6 months, they found in 10 of 11 instances that it was actually a great trade, and it worked out 10 of those 11 times going out 6 months. So again, buy and hold seems to be a better strategy than trying to fade or enact these moves based on these VIX spikes initially. I have another way of looking at the data here. This is a chart that only goes back to about 2008, not all the way back to 1990, but it shows you some of these signals here. And for instance, in 2009, we had a signal that was kind of late. We had this long period of elevated volatility during the global financial crisis. Took a long time for volatility to come back down below 30, but when it finally did, that was a great signal to get long. In 2011, it looks like that was a little bit early as well. 2016, pretty good signal there. 2018, that was Volmageddon, great. And then we had the pandemic. That was a pretty good signal. And finally, we just had one in 2023, and that was a little bit of a signal. That also produced profits going out, excuse me, that's 2024, produced profits going out at least 6 months. We haven't even hit the year mark. So we have not had recently a VIX close under 30, so we do not have that signal just yet. But again, over history, things tend to work out 6 months to a year down the line.
Here, evaluating the shift in a company's profits outlook takes precedence above all other considerations. This is due to our belief that the fair value of its shares is determined by the present value of its future earnings stream. In essence, our analysis is predicated on how sell-side analysts who follow the stock are updating their earnings projections to reflect the most recent developments in the industry. The fair value of a company's shares increases in tandem with an increase in profit projections. Additionally, investors are more likely to purchase a stock when its fair value exceeds its current market price, which causes the stock's price to rise. As a result, empirical research shows a substantial relationship between short-term stock price changes and trends in earnings estimate revisions. NVIDIA is anticipated to report earnings of $0.90 per share for the current quarter, which would represent a change of plus 47.5% from the same period last year. Over the past 30 days, the consensus estimate has shifted by 3.7%. The current fiscal year's consensus earnings forecast of $4.32 is a plus 44.5% year-over-year change. Over the past 30 days, this estimate has moved by 1.7%. The consensus earnings estimate of $5.38 for the upcoming fiscal year is a change of plus 24.6%. from NVIDIA's expected earnings 1 year prior. The estimate has changed 1.3% in the last month. Because it successfully leverages the power of earnings estimate revisions, our proprietary stock grading tool, the rank, has a strong externally verified track record and provides a more definitive view of a firm's price direction in the near term. NVIDIA is ranked rank number 2 by due to the magnitude of the most recent shift in the consensus estimate, as well as 3 additional earnings-related variables. The evolution of the company's forward 12-month consensus EPS estimate is depicted in the figure below. Nothing much happens if a company is unable to increase its revenues, even if its earnings growth is likely the best sign of its financial health. For extended durations, it is nearly impossible for a business to increase its profits without increasing its revenue. Thus, it is essential to understand a company's potential for revenue growth. The current quarter's consensus sales forecast of $42.79 billion for NVIDIA indicates a plus 64.3% year-over-year change. Changes of plus 49.7% and plus 22.6% are indicated by the $195.34 billion and $239.55 billion forecasts for the current and upcoming fiscal years, respectively. In the most recent quarter, NVIDIA recorded $39.33 billion in revenue, a plus 77.9% year-over-year improvement. EPS of €0.89 for the same time period is higher than €0.52 for the same period last year. The reported revenues are a surprise of plus 4.26% when compared to the consensus estimate of $37.72 billion. 5.95% was the EPS surprise. In the last 4 quarters, the company has exceeded consensus EPS projections. During this time, the company consistently exceeded consensus revenue projections. Without taking a stock's valuation into account, no investing choice can be effective. One of the key factors influencing a stock's future price performance is whether or not its current price accurately represents the underlying business's intrinsic value and its growth prospects. It is possible to determine whether a company's stock is fairly valued, overvalued, or undervalued by comparing the current value of its valuation multiples, such as price to earnings, PE, price to sales, PS, and price to cash flow, PCF, to its own historical values. Additionally, comparing the company to its peers on these metrics provides a good sense of how reasonable its stock price is. The Value Style Score, which assesses both conventional and non-traditional valuation indicators, divides companies into 5 groups, A through F, as part of the Style Score's methodology. It is useful for determining if a stock is overpriced, appropriately valued, or momentarily undervalued. For example, A is better than B is better than C, and so on. On this front, NVIDIA receives a D, meaning that its price is higher than that of its competitors. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.